China's top leaders have made an about-face in their economic policies amid slowing growth. They are shifting away from controlling COVID infections and towards boosting growth at the shortened two-day Central Economic Work Conference. Policymakers pledged to revive consumption and support the private sector through favorable policies that encourage private enterprise growth and broader market access for foreign firms. They singled out internet platform firms, saying these firms play a leading role in economic development and job creation. They were also cited for raising China's competitiveness in the international market. This is a marked shift from recent years that have seen Beijing intensify regulatory scrutiny on these companies. There were also clear signs of a softening of tone on property market policies. Top officials are more determined now to put a floor to the property market slump instead of controlling financial risks. Economists say Beijing signals are clear that the focus next year is to boost GDP with an eye towards a 5% growth rate or higher. Suan Teck Kin joins us now. He's head of research and executive director for global economics and markets research at UOB. Teck Kin, help us unpack the signals, the messaging from the conference. To what extent do you think we're going to see a greater role from the private sector in driving China's economy next year?
Right. Good morning. Definitely, I think the plan over the weekend, I think part of it is on private sector. If you look at the entire tone of the meeting, of this Central Economic Work Conference meeting, is on domestic demand. Now, if you're talking about domestic demand, it has to come from spending from the population, internal. And in order to get spending, you have the employment, get the employment going. So one of the topics of the discussion was on unemployment and how to get the young people employed, gainfully employed so that they can spend money. Right. So private sector plays a very important role in China's economy. There's this 5, 6, 7, 8, 9 talk about private sector. 50% of the revenue comes from private sector, and private sector employs about 80% of the China's labor force. So this is the part, I think, over the weekend, this Central Work Economic Conference talks about reform of the SOEs, state-owned enterprises, and also part of it is on job creation and also foreign capital inflows as well, giving them more opportunities. So this is an entire package from the conference last week, April.
I get the push and the objective of spurring employment in order to boost domestic demand, but how will it actually go about changing the mindset about spending, about consumption, given that the Chinese people have been grappling with zero COVID, stuck in lockdowns for the good part of the past 3 years? There's a huge shift involved for consumers.
Right. I think it's not going to be easy, especially in the next few months, where you're going to get a lot of all these infection cases, you get a wave of infections. And in fact, there are reports that says that the streets of some of the big cities are empty because people are more cautious. So you're going to have some challenges in the first parts of the later part of this year and also early parts of next year as well. People are staying cautious. Businesses are not operating at its full potential. But then for China, the final demand, we call that final demand consumption, private consumption and also government consumption, comprise about 50%, over 50% over the past 11 years. I mean, in the past, it was actually higher than that, 65%. Around 65% of China's economy came from final consumption, which is your private spending and also government consumption. So once these COVID waves are over, I think the spending will be back, and businesses start to hire people, and people get more and more income, and that's where you are going to get the domestic demand going. After all, we are talking about 1.4 billion population in China. That is a very powerful engine once it gets going, April.
It's a huge market that the rest of the world is waiting for to come back online. But when you look at the tools that the government is likely to use next year, given the details from the conference, There was a shunning of the mention that we see a front loading of infrastructure investment or new tax cuts. So realistically, what form of fiscal stimulus do you think we're going to get next year?
All right. According to the plan, Avro, the government, according to the plan, the fiscal spending includes you have all these local debt issuance, the new debt issuance, special project debt issuance that they're going to do. China's debt to GDP is roughly around 60% or so, which is much lower compared to, let's say, US, about 100%. So there is quite a bit of room for China to scale up in terms of debt issuance. But of course, in the document itself, in the meeting, it also says that the policy has to be prudent. So there will be some form of debt issuance, just like the past 2 years, and also in terms of tax cuts and also fee cuts coming in for different businesses. So that will be the one that I think in terms of stimulus coming from the fiscal spending area, Avro.
Teck Kin, really good to chat with you this Monday morning and for helping us understand what lies ahead for the Chinese economy as well as policymakers' plans. Thanks so much for sharing your analysis with us. Suan Teck Kin is Head of Research and Executive Director for Global Economics and Markets Research at UOB.